Hey everyone, Anthony Venuti here with In Touch Mortgage Solutions. It's Friday, Finance Fridays, and thank you again for tuning in for another episode. On this episode, we're going to be talking about trigger rates and how many Canadians are going to be triggered come September or November. So stay tuned, you don't want to miss this. Here at In Touch Mortgage Solutions, over the last few weeks, we've been getting a lot of calls and questions from new clients, viewers of the channel, talking about their particular mortgage and asking some questions regarding what they should be better doing to prepare themselves for further increases, as September 7th is around the corner, and that is the next rate announcement by the Bank of Canada. And subsequent to that, there is going to be one in November. And a lot of Canadians who have variable rate mortgage, and a lot of Canadians who have taken on variable rate mortgages in the last 2 years, anywhere from like March of 2020 to early 2022, are very concerned, or should be very concerned, about their mortgage, depending on if it's an adjustable rate mortgage or a variable rate mortgage with a static payment. Now, I know we did do a video not too long ago talking about this, but we are still getting phone calls from Canadians who are unaware of that product. So this particular client, this young couple who had originated their mortgage with a mortgage specialist at that institution. So it's a very important caveat here is there's a difference between a mortgage specialist and a mortgage broker or mortgage agent in regard to licensing and fiduciary duty and what our obligations are. Obviously, there's good and bad in every single scenario. And I'm not basically shaming the lender or anything like that. Obviously, what happened with this particular client was when they had spoken to the mortgage specialist, they had opted to go with the variable rate mortgage because the rate was good. It was an excellent rate that the client received at the time, almost a year and a half ago. And the client had basically advised that they were not told that there was this trigger rate or trigger point in their contract. Now, obviously, there's three sides to every story. I'm not going to sit here and take sides. I said, listen, I know that lender. I know that they are obviously on a static payment. It must be in your contract. If you can dig it up, I'm sure we can find it. What I'm looking at here is saying that's in your contract. If it's not there, it would have been in your documentation, potentially that you signed at the lawyers. It has to, your trigger point, all that detail has to be in there. And obviously the client went to try to dig it up. Obviously they couldn't find it. I said, so what I would like you to do is reach out to your lender and ask them what your trigger rate is, because each trigger rate is independent of one another. So it's depending on when you got that mortgage, what the prime was when you received that mortgage, obviously, what your amortization was. All these things can change that trigger when you get triggered, or what that trigger rate is, I should say. So obviously the client reached out to the lender, got the trigger rate, and lo and behold, if September 7th comes around with a 50 basis point increase, that particular client would be notified by their lender. Now, they had a conversation with the rep when they reached out to the mortgage department through calling, and basically, they were still a little bit concerned about what to do. So they called us back, and we were able to give them some advice. What was really alarming was, like, if this is true and the client were not explaining this to them when they signed their documents, obviously that's one problem. I mean, I know here at In Touch Mortgage Solutions, we are, bound to issue disclosure documents, have that conversation. We make notations, obviously different system, different parameters, but it's not even the point that the trigger rate was an issue for the client, because obviously, they were looking at the rate, they were happy. And, knowing this as a broker for the last 13 to 15 years, we have never, in my current profession and being in this industry for that long, I have yet to see the trigger rate being breached, except for potentially now. So maybe that person had forgot, or maybe it wasn't even a conversation because, it was never breached for the last 15 years. Whatever the case is, client was more concerned with the fact that if they would have known that their payments were remaining the same and that their interest and principal calculations were being basically manipulated by the increase in rate, that they would have countered with an increase in payment. And that is what bothered the clients, because now they've gone several months where as the rates have gone up, especially the 1% in July, that was changing their dynamics of the amortization of their mortgage, and also how much money is being contributed to principal. So that was something that was very important to that client. And when you look at that static payment, obviously in the opposite direction is the adjustable one, right? So the client was talking about wanting to increase their payments, where any mortgage, you can increase your payments, but on the variable rate mortgages that are adjustable, like your Scotias and HSBCs, your credit unions, and the majority of the broker banks that us as brokers have access to with great rates, those mortgage lenders actually have an adjustable product, which means as the Bank of Canada increases its overnight policy rate. That policy rate then triggers the lenders to increase their prime rate. And once that prime rate goes up, that cost is basically translated directly to the consumer and their payments go up automatically. So although that is painful for many clients who are on those products and in those variable rate mortgages, the idea is that your amortization remains the same. You're paying, yes, a little bit more money towards interest, but you're not in a position where you can potentially be not paying any money towards principal, right? So looking at this article, talking about variable rate mortgages about to trigger payment increases. I encourage you, this is in the Canadian Mortgage Trends, something that we read on a frequent, talks a little bit about that, how can a fixed payment mortgage increase? And I wanted to bring the attention over to this, and this just illustrates the point. So basically, back if you got a mortgage for $585,000 in January of 2022, let's say the rate was 2.45%, or the prime was, your rate was 1.45%. Let's say it was a 1% discount. That was your payment of around $2,005, and interest was $707. Your principal payment was $1,298. Fast forward August, let's say we are now at 4.70 prime. You're still minus 1% at 3.70. But now if you look over, only $201 is going towards your principal. And obviously looking forward here, if we go to, potentially September, November, if the policy rate goes up, let's say another 50 basis points, that brings your rate to 4.2. And depending on that payment, if it's static, because it still stays the same, right? This payment still stays the same here. You're now in a situation where you actually are not even contributing anything towards your actual principal. What I would suggest doing is downloading our app in the description box below, and you can start to play around with what your payments will look like, what your amortizations will look like, so that it gives you a little bit more guidance moving forward. And whether you're on this variable or it's just static, or you're on a variable with an adjustable, if you can afford to increase your payments, we are advising our clients to do so. Many Canadians are going to feel the pain when they get notified by their lender about their trigger rate being breached, and that they need to basically look at their finances. And what happens is the lender is going to reach out, whether it be through email or through phone or through correspondence through mail. It's important to understand that your information with your particular lender is current and up to date. And by this, I mean some clients who have purchased a home, maybe that home is their primary residence, but over the little while, maybe they rented it out. Maybe they've moved back in with family. Maybe they, have changed their phone number. Maybe they have unsubscribed or canceled any emails coming from that particular lender or that particular specialist in that case, right? So it's very important that if you're with a lender is to get your information up to date, so that if you reach the trigger point, you are going to be notified, which basically, if you do not act when you're told to act from the lender, you could be in default of your mortgage, and that can open up a whole new other can of worms. But for those Canadians who are a little bit more proactive, maybe those Canadians who are watching these videos and trying to get a little bit more informed about their mortgage decisions, we encourage you to maybe share this video or share this information with someone who has a variable rate mortgage, so that they can be better prepared. Because there's nothing worse than not knowing and then being in a situation where we were notified. So obviously there's different scenarios there. I'm just basically giving you the worst case scenario in that particular case. But now if you are in any of these mortgages, obviously more importantly, if you are in a variable rate mortgage with a static payment, my advice and our advice to our clients is, number one, increase that payment ahead of September 7th. If you are with one of the top 6 banks, not Scotia or HSBC, maybe reach out to your lender, find out what your trigger rate is, if you have a trigger rate, and increase those payments to the best of your ability to ensure that you can either avoid the trigger rate this time around or kick that trigger rate down the road a little bit. The other option that you're going to have if you're on one of these static payments is putting a lump sum towards the mortgage. Now, obviously, that might be challenging for some Canadians who are financially strapped to go there and put, even an extra couple $1,000s on their mortgage. Might be very challenging, especially in these times with inflation and the cost of goods and services, everything going up. But that is an option if you are in a position to make that decision. The other and final option is fixing the mortgage, basically going from a variable rate mortgage into a fixed rate mortgage. Now, for many Canadians, they may opt into that, but it is very important to understand that once you opt in to a fixed rate mortgage, obviously, I don't need to recap this. We've done videos on this before, but once you lock into a fixed rate mortgage, your penalty no longer is a 3-month interest as it would be with the institution for interest only. It now becomes a fixed rate IRD, which is interest rate differential on that penalty. So depending on what you lock in for, if you decide to get out of that mortgage, if you decide to restructure that mortgage, you will be potentially paying a penalty. And if you decide to leave that lender, obviously the full penalty applies. So you have to understand that component, especially because if we start to see some easing in interest rates, so that's important to understand that if interest rates come down and you lock in a higher interest rate, potentially, if they come back down and you want to try to get into a lower rate and you locked into a fixed, the penalty to get out of the mortgage will definitely outweigh the benefits of staying in a variable rate mortgage, depending on how you see the Bank of Canada moving forward over the next little while. So obviously, as I said, we're just presenting the data, looking at the 2 points, saying here's what's going to happen. Here, if you're in a trigger rate situation with a static payment, what you should be doing. If you're in an adjustable rate mortgage with payments that change manually, you can still increase those payments, and looking at all that data independently. So obviously stay informed. That's our goal here at In Touch Mortgage Solutions, doing these Finance Fridays videos. We want to leave the video here and wish everyone a great weekend ahead. And remember, thank you for watching. Thank you for clicking. Don't forget to hit the share, like, and subscribe button. And we'll see you next week, next Friday. Thank you again for watching. Stay tuned.